Okay, so we are here in the basics of share market course, and today is lecture number 2, and let's see what will we learn today. I hope you people have seen the previous 2 videos or you have attended the class. Ankit had attended the class, and uh, and I hope those who are viewing the video have watched the previous 2 videos. And so today we will learn about the secondary market and its financial regulators and the intermediaries involved. Now, what is the secondary market? We had discussed about the primary and the secondary market in the previous video itself, but still I will bring in a quick recap about the primary and secondary market, not spend a lot of time in it. We will just bring in a quick recap about what primary and secondary markets are, and then we will move on to the entirely to the secondary market, which is important to us, as in most of the times we will trade in the secondary market only. We will buy or sell shares or any financial instrument through the secondary market only. So today we will know about the mechanics of the secondary market. The mechanics. Okay, now what do I mean by mechanics of the secondary market? We'll know about it in a few minutes. So before I start, a very important disclaimer to be given is that I'm not a registered financial advisor, and all the things that will be discussed are for educational purpose only, and therefore if I recommend any, I won't recommend. If I take name of any share, or if I share any kind of strategy with you, it doesn't mean that you go straight away and buy that share or you go and execute that strategy. It is purely for educational purpose, and I would request all of you to do your own research or consult your financial advisor before taking any kind of financial decision. So I know it's a very lame thing, but it's a disclaimer that should be given when you are teaching this kind of thing. So firstly, we will do the quick recap of the types of securities markets. I hope the 3 of you here, since Akash said that he had seen all the videos, so all 3 of you are aware of the types of the markets. Still, I will do a quick recap. So what are the types of securities markets? What we call the share market is basically referred to as the securities market. So the securities markets are of 2 types. Number 1 is the primary market, which is called the issue market, and number 2 is the secondary market. Now what is the primary market? Now in a primary market, the transaction takes place directly between an investor and the company. And in the primary market, as the name suggests, the issue market, the company is listed for the first time in the share market. So when a company enters the share market, it enters through IPO in the primary market, where investors invest in the company and the transaction happens between them directly. There is no middleman. And after the company is listed, it goes directly to the secondary market, where it is traded for the rest of its life. And in the secondary market, the transaction happens between 2 individual, or may not be individual, 2 investors. So the transaction happens between 2 investors in the secondary market, and there are many things involved. So far we have only known that transaction happens between 2 investors in the secondary market, and in the secondary market we have NSE and BSE, but we don't know anything else. Today we will know about what is NSE, BSE, and every other entities involved in this process of trade or investing. Today we will know about that. So when in the secondary market, therefore when you go and buy shares, in the share market, you practically buy it from a person who is selling that share at that price at which you are buying. So the transaction is between two people. Now this sounds quite simple, but this process has to be seamlessly conducted, and that process has a lot of steps, and each step has to be done by each individual entity. Who are those entities? We will know about them now. So the secondary market, let's get into the definition. We have already known about the secondary market, but it's a duty to know about the boring definitions also. So the secondary market, also called the follow-on public offering. So in the primary market, it comes through initial public offering, and in the secondary market, it is called the follow-on public offering, FPO. So the follow-on public offering or the aftermarket, the secondary market is called the aftermarket. So as the primary market was called issue market, secondary market is called the aftermarket. So the secondary market is a financial market which provides a platform for the investors to buy and sell previously issued financial instruments. Now, when I say the term financial instruments, it doesn't only refer to shares of companies. It could be any other financial instruments also. Financial instruments. So financial instruments could be futures and options also, like the derivatives. Okay, and shares also. So secondary market offers the platform for investors like us to trade in the financial instruments. Now the secondary market has a lot of wings. Wings means parts, or the organs. Like if the secondary market is a full human body, then these are the organs who perform their different jobs in order to let the secondary market keep alive, in order to keep the secondary market alive. Every one of them have their individual and their independent jobs. Okay. So first one are the stock exchanges. Now each of these organs, which I call the organs or the parts of the secondary market, will be dealt deeper later. Okay, now for now I will only tell you the names and what are their sub parts, and we will discuss about them in detail in a few minutes. So the first part are the stock exchanges. Stock exchanges include NSE and BSE, the National Stock Exchange and Bombay Stock Exchange. Nextly, we have the market participants, that is the investors. Now the investors, there are, depending upon the net worth, depending upon the location in which the investors are based, depending upon whether they are individual or they are a group of people, the investors are divided into various categories, which are like the domestic individual participants, the NRI and OCIs, the DIIs, the DAMC, and the FII or FPI. Now, what are these stock exchanges? What are these market participants? Like, what are market participants? We know these are the investors, like you and me people. But what are stock exchanges? What are all these? You might be confused a little bit, but it will be all crystal clear after the end of the class. So stay with me till I make it interesting. So for now, you need to know about the names only. Okay, what they do, what their work is, we will be discussing along with some practical references. Now next comes the regulator. Who is the regulator? Regulator is SEBI. Okay. And lastly comes the market intermediaries. Now there are a lot of market intermediaries. We will not know every one of them, but the most important among them is the stockbroker, obviously. Nextly, we have depository. Then we have the depository participants and the clearing houses. So the screen right now, which you see, contain all the organs of the secondary market. Now all of them have their individual duties to perform, which are independent of each other, and all of them work for us so that we experience a seamless we have a seamless experience while trading in the share market. Okay, so when you buy a share, someone is selling that share, so you get that share from that person from whom you don't know that, and you don't need to know that. As long as you get at your favorable price, you don't need to know from whom you are getting. So when you buy a share, you get it from another person, and this process might sound very simple, but this process is carried out through a number of steps which are carried out by these people, not these people, these entities. Okay, now we will know about each of them, not in brief, again not in too much detail, because that's not our purpose, but we should know about them. We should know the mechanics of the secondary market also, like what is happening behind it. I am buying a share, I am getting it in my account, but what's happening behind? We should have a question in our mind. So let's move on. So the first entity about whom we will know is the stock exchanges. Who are the stock exchanges? Now let's discuss about the boring definition first, and we will then relate it with a very practical example. A stock exchange or a securities exchange is an exchange which provides a platform for the traders, investors, or stockbrokers to buy and sell financial instruments among themselves. Now these definitions might go from above your head. Think of stock exchanges as the dukan, what I said earlier, it is the shop. Stock exchanges are like the shop. If I were to more emphasize, it is like a marketplace. It is like a marketplace where you are able to trade. What do I mean by trade? That is, you can buy or you can sell. What do you buy and sell? You buy and sell financial instruments like shares, derivatives, etc. So it is like the shop from where you buy and sell. Now you have a question in the mind that previously I said that whenever you buy a share in the secondary market, you buy it from another investor, another person, and whenever you sell a share, you sell it to someone. Again, I am saying that you are buying or selling in the stock exchanges. What do I mean by this? Think about Amazon. We have all purchased products from Amazon. Now, the products which we purchase from Amazon, do they belong to Amazon company? Like, do we purchase the products from Amazon company? Well, the answer is no. We don't purchase the products from Amazon company. Amazon is a platform. Amazon is a marketplace where sellers come and they register and they upload their products, and we as buyers, we also come to Amazon, see the products, and then purchase. So we buy, and we can also register on Amazon as sellers. If we have a GST and all, we can also register on Amazon as a seller, and we can also sell products. So we can also trade on Amazon. So think of stock exchanges as the Amazon of shares, where you get the shares, but you don't know that whom do the shares belong to. Okay, you go and buy the shares, you place an order, you buy the shares like you do in Amazon. In Amazon you get to check about the company name, like which company does the product belong to. But when in case of stock exchanges, when you come to buy a share, you don't get to know from whom you are buying. That's the only difference. The rest is same. It is like a marketplace where you trade, okay, where you only trade. So the job of stock exchanges is only to offer a trading experience. So you buy and sell via the stock exchanges. So I hope it was understood. So you can turn on your mic and say yes if you understood, and say no if you didn't.
Yes, sir.
That's the job of stock exchanges. Now, stock exchanges often function as continuous auction markets, with buyers and sellers consummating transactions via open outcry at a central location such as the floor of the exchange, or by using an electronic trading platform. Now there's some interesting things to know here, that stock exchanges are like the dukan. Like we have all seen IPL auctions, right? IPL auctions where the players are bought and sold. What happens there? What happens in an auction? So the bidding happens, right? So previously, when there was no electronic system, no digital system, no mobiles, no internet was there, what used to happen was that the buyers or the investors used to go to the stock exchanges physically, and they used to perform like an auction, like you see in the IPL auction, an auction for shares. They used to bid for shares, and those who bid the highest got the shares. That is called as an open outcry. And the open outcry used to happen at the floor of the exchange. Okay, this used to happen at the initial stages very long time ago, but nowadays this doesn't happen anymore. We all do our transactions via the electronic trading platform that is provided by the stockbrokers. Now there are two stock exchanges in India. Number one is the NSE, the National Stock Exchange, and number two is the BSE, the Bombay Stock Exchange. Well, both are located in Mumbai only. Now there is, I think, another stock exchange also, which is called the MCX uh, the Multi Commodities Exchange Stock Exchange, which is not that popular. And there used to be many other stock exchanges as well, such as the Bangalore Stock Exchange, Madras Stock Exchange, Calcutta Stock Exchange, which have either merged with NSE or BSE or have shut down. So these are the two major stock exchanges that are at present there in India, which provide you the trading platform. Now the question in your mind is, maybe not, but should be, is that do you go to NSE or do you go to BSE? When I say that do you go to NSE, do you go to BSE, I don't say that you physically go to NSE or physically visit BSE. I say that do you go to the website of NSE or website of BSE to buy and sell shares? What I'm asking is, do you directly deal with NSE and BSE while trading? The answer is no. You and me as investors, we cannot directly deal with NSE and BSE, the stock exchanges. We have to deal with the stockbroker. Stockbroker. Okay. Now the stockbroker is a member of the stock exchanges, and we trade via the stockbroker. So as the name suggests, broker means dalal. So broker is between NSE and BSE and us, which helps us to trade. So we place our buy and sell orders in our trading account that is provided by the stockbroker that we choose. And you have seen ads of many stockbrokers like Upstocks, Grow, Angel One, etc., etc. So that's the job of a stockbroker. That's not the only job of a stockbroker, but that's one of its main jobs of a stockbroker. So you don't go directly to NSE and BSE in order to place a buy order or a sell order. NSE and BSE won't listen to you. They will listen to the stockbroker. Okay. Okay. I hope it's understood. Oh shit. Hmm. Okay. So we understood what stock exchanges are and what stock exchanges do. So the next entity which we will know about are the market participants. Now anyone who transacts, that is who buys or sells in the stock market, is called a market participant. Okay, that means the market participants refer to the investors. Now there are different kinds of market participants based upon their location, their net worth, and their individuality, or they are in groups or not. Based upon these factors, there are many types of market participants. So there are domestic individual participants, there are NRI, OCIs, we knew about it. There are DIIs. What are these? What are the full form of these? We will know. So there are DAMC and there are FII or FPIs. So the domestic individual participants have two people in them: the retail individual investors, RIIs, and the high net worth individuals. You will get to know about these terms mostly in the times when you get to apply in an IPO. You will get to know, like HNIs have oversubscribed, or HNIs have subscribed this much percentage, RIIs have subscribed to this much percentage. You will get to know about these terms during IPOs a lot. Okay, so who are retail individual investors? People like you and me. Now I consider you as poor like I am, so that's why I am calling you retail individual investor. Basically that means if you have a net worth which is less than crore rupees, you maybe are falling under retail individual investors. But from an investor's perspective, if you are applying in an IPO, say, okay, if you are applying in an IPO, and if you apply in an IPO with more than 2 lakh rupees, then you will fall under HNI, that is high net worth individual. You won't anymore be a retail individual investor. So in an IPO, if you apply with more than 2 lakh rupees, you will fall under high net worth individuals. If you apply with less than 2 lakh rupees, you will fall under retail individual investors. So these fall under domestic individual participants. So the name defines itself. No, domestic means the people who are Indians and reside in India, and individual means individual people, one people. Okay, people, you, me, only one. They refer to one people. So the domestic individual participants have retail individual investors or high net individual investors. High net worth individuals usually have a net worth more than 5 crore rupees. So if anyone has a net worth of more than 5 crore rupees, then they would fall under the high net worth individuals, mostly the seasoned entrepreneurs, businessmen, the investors and all fall under that group. Now next comes the NRIs and OCIs. NRIs are non-resident Indians and OCIs are overseas citizen of India. Now there is difference between the two. Non-resident Indian mean a person who is India based, okay, who has some roots in India but is now presently staying abroad. That person is a non-resident Indian. For example, if you have a job in, say, if you get a job, say, in America, and you shift to America, and your parents still stay in India, then you will fall under NRI category. And overseas citizen of India means you are not born, that means mainly foreigners who come to India and then seek for citizenship. They fall under basically the overseas citizen of India category, OCIs. So the NRI status can also be given to citizens who live abroad but have the roots connected to India, whether through their parents or guardians. On the other hand, OCI card holders are foreigners or citizens who want to work or study within the Indian territory. So those are the NRIs and OCIs. DIIs. DIIs are the domestic institutional investors. These include banks. Okay. So these are also domestic, but these are not individual. They are institutions. Okay. They are institutions. DAMCs include domestic asset management companies like the mutual funds. The people who, you know, uh, they they manage your assets. Like you invest in the mutual fund, and where do the mutual fund invest? They invest in the share market only. Okay, and they cut a percentage because they provide their expertise. That's the job of the mutual funds. That is how they earn. So when the mutual funds are investing in the share market, they will fall under DAMC. And finally, the FIIs or FPIs are the foreign institutional investors or the foreign portfolio investor. I hope this name suggests this name is self-defining. Foreign institutional investors. So these are the types of investors in the Indian share market. And so which category do you fall in currently? We fall in retail individual investors category. Someday, if we go to any other abroad country and settle there, we will then become NRI. That's a different issue. But now we are retail individual investors, and we would always work our whole life towards getting into this category. That is the high net worth individual sections, right? So whenever in the secondary market you are buying a share or you are selling a share, that means someone out of these categories of people are selling that share at that price at which you are buying. Again, the same occurs vice versa. Like when you are selling a share at a particular price, someone out of these categories, is buying that share at that price. So these are all the market participants. So was it clear to all of you?
Yes, sir.
Okay, let's move ahead. So the next entity is the regulator. Who is the regulator in India? It is SEBI, the Securities and Exchange Board of India. It is the regulatory board for securities and commodity market in India under the ownership of Ministry of Finance with the Government of India. Now we don't need to know all of these definitions. We only need to know about what does SEBI do. Think of SEBI as the boss. SEBI is the boss. Okay. Now as the name suggests, it is the regulator. It regulates. It regulates and it specifies the jobs of every other entities. Every other market intermediary have their own jobs to do, and they are independent of each other, and they have been defined by the SEBI only. And the market intermediaries are bound to work within the limit that is given by SEBI. Okay, so think of SEBI as the boss. Now SEBI also has its headquarters in Mumbai. So Mumbai, you can say it is the share market capital of India. You can say it. All the share market important offices are located there, most of them. Now SEBI aims to promote the development of stock exchanges, protect the interest of retail investors, and regulate the market participants and financial intermediaries activities. Okay, SEBI has specified many rules and regulations. What is the aim of SEBI? SEBI wants to satisfy every market participant. Okay, SEBI actually wants to satisfy everyone. Okay, like many scams have occurred, SEBI doesn't want that any other scam in future happens. SEBI works in development of the share market continuously. That is the aim of SEBI. Okay, and that is how the rules have been set by SEBI. So SEBI has prescribed set of rules for each entity which are involved in the this should be involved in the intermediary process, which are specific to each entity and are available under legal framework section of their website. So if you want to check that what are the rules set by SEBI for the different market intermediaries, you can go to the website of SEBI and then go to legal framework and then check that what are the rules that has been set by SEBI for each entity, and each entity has to work within those rules. Okay, each entity should operate within the legal framework as prescribed by SEBI. So SEBI, I think, was quite well understood, like it is the boss. Okay, it is the regulator. So shall I move on?
Yes, sir.
Yes, sir.
Okay. Now next comes the market intermediaries. Now the market intermediaries are the most important for us because these are the entities which work for our seamless experience in the share market. Okay. So the entities ensuring an effortless and smooth experience for transactions in the stock market, complying with the rules laid out by SEBI, are called market intermediaries. So what is the job of market intermediaries? Their job is to ensure that the buy and sell, that every buy and sell, that every transaction that happens in the stock market should happen in a seamless and smooth manner. That is the aim, that is the job of the market intermediaries. And every one of them has their individual roles in achieving this aim. Every one of them have their individual and independent roles in achieving this aim. Okay, and also they have to comply by the rules that are laid out by the SEBI. Okay, so the market intermediaries, as we have come up, are they include the stockbroker, the depository participants, and clearing houses. Now what are they and what are their jobs? We will know about them, and hopefully we think our class will end there. So what does a stockbroker do? We have come to know about one job of a stockbroker already when we discussed about the stock exchanges. So the stockbrokers are the members of stock exchanges that we came to know. Investors can trade in this secondary market only through the members of stock exchange. Okay, So as an investor, if you want to invest in the share market, you have to have three things. Number one is a trading account. Number two is a demat account. Number three is a bank account. Now you can have all of three under the same entity. Now you can have the trading and demat account under one entity and the bank account under another entity, which happens in most of the people's cases. Like they have trading and demat account in some other entity, and bank account they have some other entity. And so you have to have these three things. What is the job of the trading account? Through the trading account, you carry out your buy and sell orders. What is the job of demat account? Demat account acts like a shelf, okay, where you keep your shares. Nowadays, the share certificate that you get after buying a share of a share of a company, you don't get it in physical form. You get it in demat form, dematerialized form, that is in digital form. And those shares are kept in the demat account. That is the job of a demat account. It keeps your shares. And bank account is necessary because from a bank account only you can add money with which you can buy shares. And again, if you sell shares or sell any financial instrument, then the money has to be credited somewhere, and that money will be credited to your bank account only. So for this reason, a bank account is a must. So these three things you have to have. Again, you also need to have some address proof, your identity proof. Those things are also necessary while opening a trading and demat account. But these are the three things. Now, as I said earlier, you cannot yourself go to NSE and BSE and say that, hey NSE, I want to buy Tata Power. Hey NSE, I want to buy Exide. NSE won't listen to you. You have to use your stockbroker. You have to tell your stockbroker that what you want to buy or what you want to sell. The stockbroker, as the name suggests, it is a broker. It lies between the NSE BSE and you, and the trading phenomenon is carried out. Okay, so this is how the trading works. Okay, now the next question is, you have bought the shares. Okay, you have bought the shares. Now I said after buying the shares, you will keep the shares in the demat account, right? So you have to have the demat account also to keep the shares. Now comes the role of the depository. So a depository is a financial intermediary which offers the demat account service. Okay, there are two depositories of India, NSDL and CDSL, National Securities Depository Limited, and Central Depository Service India Limited, that is the CDSL. So both of them actually are quite the same, and you don't know actually when you open a trading account with some stockbroker, you don't know that which depository are they linked to. You don't get to know about that. Maybe you know about that when you actually transact, when you actually buy or sell a share. So the demat account service is provided by the depository. So who helps in trading? NSE BSE. Who helps in keeping the shares? CDSL or NSDL. Now here comes the same type of question, that after buying the shares, do you yourself go to CDSL and say, hey CDSL, please give me my demat account, or please keep these shares in my demat account? Or when you sell a share, Do you go to CDSL or do you go to NSDL and, well, open your demat account and then bring your shares? Do you do things like that? No. You also cannot deal directly with CDSL or NSDL, quite like what was with NSE and BSE. NSDL and CDSL won't listen to you. Here also in between comes stockbroker. I won't say only stockbroker. Here comes the depository participants. So the depository participants act as intermediary between investor and depository. In most of the cases, stockbrokers and banks act as the depository participants. So you will see that whenever you see an ad of a stockbroker, they say open a demat and trading account with us. They say both of them. Okay, so whenever you open a trading account, your demat account is automatically opened, and your demat and your trading account are interlinked. Okay, you don't need to think of them as two different things. Well, actually they are two different things, but you don't need to worry about that, because when you carry out a trade, say you bought share of a company, you bought it through your stockbroker, that was done through NSE or BSE. Now CDSL or NSDL will provide the demat account service. That the share which you bought will automatically be given to your demat account after the trade is done. That will take some time, but it will be given to your demat account automatically. You don't have to worry about that. Again, if you have some shares in your demat account, and when you sell those shares using your trading account, the stockbroker will take care of that, of the thing that the shares present in your demat account are debited and they are credited to that person who is buying from you. This is how it works. Okay. Now here comes that when you buy a share, you pay money. That money has to be credited to the person who is selling the share at that price, and you don't know to whom, from whom you are buying. And the same case is happens when you sell a share. When you sell a share at a price, there is someone at the other end who is buying that share at that price, so the money from his account should come to your account. So the clearing of the shares must be done efficiently, and that clearing service is done by the clearing houses. And the clearing houses include the National Securities Clearing Corporation Limited, the NSCCL. For NSE, if you trade from NSE, NSCCL will take care of the clearing, and if you trade from BSE, ICCL will take care of the clearing, the Indian Clearing Corporation Limited. What is their job? Their job is to clear, is to, you know, look that nothing, is to look out that from whom anyone is buying, is to look out for the two people between which the trade is happening. Okay, you as a buyer, when you buy, you don't know whom, from whom you are buying, but the clearing houses do know. So they take care of the thing that the money which you give to buy the shares goes to the account of that person, and the shares from the demat account of that person come to your account. This clearance is taken care of by the clearing houses. So these are the individual responsibilities of each of the market intermediaries, but every one of them have one aim, that is to ensure an effortless and smooth experience for transactions in the stock market. Okay, as you saw. So to sum up, where is the dukan? The dukan, the shop is NSE BSE. NSE BSE is the shop. We are market participants as investors. We could be sellers, we could be buyers. Okay, this is the shop. Okay, here are listed our product. What is the product? The financial instruments, could be shares, could be derivatives. And market participants have the right to trade here. Now market participants cannot do it directly, there is someone in between that is the stockbroker. Above them all lies the boss, who is SEBI, who has set rules, okay, for all of them. And then there are the market intermediaries. They look at the minute processes that takes place when you buy or sell any financial instrument in the share market. So the process is so seamless, so smooth, that you would imagine that how the hell is there are so many processes happening behind this so smooth and so quick process. But this does happen. Okay, so these are the mechanics behind the secondary market or the share market. And you also came to know about how do you get started to investing in the share market. So first of all, you need to open a trading account and you need to open a demat account. Both of them are they are offered by the same broker. You can choose your broker according to your will. The broker I use is Zerodha, and I would recommend Zerodha to everyone out of them. Okay, Zerodha offers very good experience. Now, since I am providing this course completely for free, and if you think you have got any value from me, what you can do is you can open your trading and demat account from my link. Now that won't cost anything extra for you. I would get some perks for that. I won't get any money because Zerodha doesn't give any money, but Zerodha gives some perks. I would get some, I would get to use some research tools, etc. And Zerodha takes, I guess, rupees 200 or so, and it will take same if you open a Zerodha account independently. It will take 200 rupees. If you open it from my link, it will also take 200 rupees. So you can, it's your choice. I will share the link in the WhatsApp group or in the description. And if you want to open a link from for free, then the broker I use is Alice Blue. But I just have the account here. I don't trade here, nor do I have any shares in the demat account of the Alice Blue broker, because I trust Zerodha only. Okay, and I have all my portfolio in Zerodha, and I do trading through Zerodha only. Both my investments and trading are done through Zerodha. So if you want to open a demat and trading account for free, you can open it through Alice Blue. I will give the link. uh, and if you want to open in Zerodha, I will also give the link. And if you want to go for any other broker, I don't have any other account with any other broker, then you can independently do that online. Okay, it takes very few time to get started with your own demat and trading account and start trading. So but I would advise you, after you open your trading and demat account, there will be some khujli in your hands that let's buy some shares, let's start trading. Don't do that unless you have knowledge. Okay, but you can open your demat account, that's for the start. Okay, but don't start trading immediately after you open your demat account. Just that you have the opportunity to buy, don't buy. So that is it for today.